Hello everybody. Finally, today is the last class of winter spring fall quarter. So, how was your Thanksgiving holiday? Anyway, today we will study the final chapter. Excuse me. Financial statement and accounting part. As we know, the business major is consists of 6 or 7 areas: finance, accounting, human resource, marketing, manual science, operation research, MIS, etc. So among them, the accounting is the oldest major part. So today we will briefly review the financial information and accounting part. So also this chapter is as a same learning outcomes after class. We can do it answer these questions. First learning outcomes is why are financial reports and accounting information important and who use them. So as you know, there now a lot of the financial information in the market. So who use the financial statement and who make this one? And second is what are the difference between public and private accountants and how has further registration affected this work, their work. So what are the differences public and private accountants? So it means it's certified, license or not. Number 3 is what are the 6 steps in the accounting cycle? There are some cycles, and there are many kinds of steps, but this chapter using the 6 steps, sorting by 6. Number 4 is what terms does the balance sheet describe the financial condition of an organization? So the number 1 question is accounting information or more financial report. Among the financial report, the first one is the balance sheet. So balance sheet shows to what? Number 5, how does the income statement report the firm's profitability? So the financial statement consists of the balance sheet, income statement, and statement of cash flow. So the 3 things is the financial statement. So 4, 5, 6 is the income statement, state of cash flow, important source of information. So regarding for state of cash flow. And then number 7 is how can ratio analysis be used to identify a firm's financial strengths and weaknesses? So ratio analysis is a little bit difficult area. At least this one is not there in the bachelor degree. Financial analysis is a little bit higher level for financial statements, so at least master level study. But we are introduced to who use this ratio analysis and what is the ratio analysis have strengths and weaknesses. One major trends after the accounting industry today, so the accounting trend, fashion, and development direction. Next is chapter 14, consists of 8 chapters. Number 1 is accounting, more than numbers. Accounting is number, but the accounting is more meaningful concept. Second verse is the accounting profession, basic accounting procedure, the balance sheet, income statement, statement of cash flow, right? This financial statement, and analyzing financial statement. And how do we use the financial analyze the financial statement? And last chapter is trend in accounting or financial reporting. So. And first is accounting more than numbers. What's the meaning?
So accounting more than numbers. It means accounting is shows to just the numbers, but the numbers shows to every information in there. We can see just numbers. No, there are many meaningful numbers in accounting. So it's a very normal concept. And the accounting basics. So accounting is the process of the correcting, recording, classifying, summarizing, reporting, and analyzing financial activities. So say again, accounting is the process of correcting, data correcting, sales volume, sales activities, sales income, or some buying, sell, everything. And the recording, bookkeeping. And classifying, this is for A part, T part, some participating. And summarizing is summarizing. And reporting. And also analyzing financial activities. Okay, this is all things includes the accounting processing. So it results in reports is describe the financial condition of the organization or some company. So if we saw the financial accounting, it can show to the financial conditions. So this is accounting basic. So who used the financial report? So before that time, okay, I say that. And who used the financial reports? The financial report have two kinds of it. One thing is financial accounting. The other one is managerial accounting. So financial accounting means is accounting that focuses on preparing external financial report, external, outside, that are used by outsiders such as lenders, suppliers, investors, and government agencies to assess the financial strength of the business. So the financial accounting is to outsider. So the prepare for external financial statement is financial accounting or financial statement. And the managerial accounting means is accounting that provides financial information the managers inside the organization can use to evaluate and make decisions about current and future operations. This is for managerial accounting. So simply we say the managerial accounting is inside. Financial accounting for outside. Okay, it's simple. This is for that because this is an introduction class. So you have to know the financial report have sorting two things. One thing is managerial accounting, financial accounting. Managerial accounting is to inside. Financial accounting is to show others externally, such as the lenders, investors, suppliers, something. And there are some licensing or some certificate program because it's this is public affairs. So there's generally accepted accounting principles, so GAAP. It means it's a financial accounting standards followed by accountants in the United States and preparing financial statements. So the government have some make financial statement regulation. So that regulation is GAAP. So generally accepted accounting principles. This is GAAP, some regulation of financial reporting. And the Financial Accounting Standard Board is FA. As we are seeing, acronym is FASB, is Financial Accounting Standard Board. Is the private organization that is responsible for establishing financial accounting standard in the United States. Also, United States government made the financial accounting standard by FASB. There are many regulations there. And the other one is annual report. As you know, if you have some your own business, you have to do annual report to the IRS. Also, all of the United States people have to tax report, personal tax report until April 15th every year. So you get some financial activities, and then you got some W2 or 1099, any kind of income statement attached the tax report until next year, April 15th. Mostly the company issue the W2 or some income statement for employees January to February. And then later we will talk that some assistance, for example, CPA or EA, financial statements, somebody do it themselves. So have to tax report until April 15th. Okay. So annual report is a yearly document that describes a firm's financial status and usually discusses the firm's activities during the past year, just 1 year, January 1st to December 31st. This is tax year, and this prospects for the future. This is for ready for future next year. This is annual report. Okay, and the accounting professions. There is accounting professions. So accounting professions is what is the difference between public and private accountants. So how has federal registration affected their work? So the private or public accountants works that follow the federal regulation, and what is the regulation? Something this part. So first we will know the public accountant. The independent accountants serve the organization and individuals on the fee base are called public accountants. We say the public account means is individually accountants organize, serve the organizations and individuals. So they work for organizations or individuals by fee, get the processing fee or service fee. This is public accounting. So public accounts is offered a wide range of services. So the income tax or bookkeeping, everything, including the preparation of financial statements and tax return. I say this tax reporting annually, and the independent auditing. Some cases IRS have report for auditing of financial record, and then accounting methods and management consulting. So some cases consulting for the client. This is for public account. In the meantime, it's very serious things is auditing. Auditing is very open for business guys, because it's if you have some your own business, and then during the time if you receive the auditing report from the IRS, it's very open. So you have to do ready for auditing. It's not easy job. So in this case, you need for help from other expert, for example, CPA or some lawyer. So, but it's don't worry about that. If you are your own business, and also you are very honestly tax report, and then there's no problem, because it's the IRS cannot take all procedure in the world, in the states, and so they check it the system, and then some system is to check the some problem, and then they asking what is the problem and what is the report false, and response that, and then the CPA or some helpers report to the IRS, and then they IRS think about is it reasonable or not, and then they issue the auditing. And this is auditing. So auditing means the process of reviewing the record used to prepare financial statement and issuing a formal auditor's opinion indicating whether the statements has been prepared in accordance with accepted accounting rules. That means to simply say this, they have followed the rules or not. This is auditing. So the other concept is to become you have to know the CPA. You heard a lot. CPA is Certified Public Accountant. It's very popular and rest of help from the professional tax related tax stuff and tax things. So we say the CPA, Certified Public Accountant. So an accountant who has completed an approved bachelor's degree program, at least the bachelor's degree program, and passed the test prepared the American Institute of CPAs. The CPA test consists of 4 parts. Then you take the 1 by 1 is okay, take 1 term okay, 2 and 2 is okay. So mostly if you have some if you have graduated in the business major, I think it's 5 or 6 months is enough for pass the test. Okay, after passed, state requirements, it means is intern hour. For example, 500 hours for some certified CPA or some financial company. And then first time, if you pass the exam, and then only you pass exam, and then you have to do internship hour. 500 hours per year. Just 500 hours. So it takes most of them is 1 year is enough there. After that, you try to get the license. 2 things. One thing is pass the test, and the other one is internship hour. And then the American Institute of CPAs approve your CPA license. Okay, and only a CPA can issue an auditor's opinion on firm's financial statement. The financial statement or accounting is 3 kinds. It's not important. Anyway, the CPAs can control the auditing and bookkeeping or compliance. Okay. This is for public accountants. It means is CPAs have some approved from the government for working for relating the financial. And the other side is private accountants. It's a certified management accountant, CMA. So it means it's a managerial accountant who has completed a professional certification program. So including passing an examination, that's it. So we say the EA, something like that. So private accountant means is certified management accounting. It's only related managerial accounting. It means it's inside. I'd say this financial accounting is to outside to show them. So, but it's managerial accounting is private accountants, CMA control them. Okay, so say again, accounting professions, 2 things: public and private. Public is CPA. CPA can control auditing, and the private is CMA. CMA is only managerial accounting inside financial statement. Okay, and reshaping the accounting environment. What's the meaning? This is although our attention of the focus, the big name accounting standards, something this because it means it's reshaping the accounting environment. It means is they even though the private or public, mostly we say the CPA, and I am owner and the business operator. So many kind of struggle there because it's basically I don't want to move tax to government, and the CPA wants to only follow the regulation. There are some trade-off in here. So this means is shaping the accounting environment. So first thing is to follow the regulation, but a little bit room for tax saving. This is for another area by assist by accountant. It's not illegal, but a little bit room means is about assist from the CPA. Better numbers ahead means is if you are the number of account reforms to is much more information in the numbers. So the numbers is not meaningful itself, but the numbers include lots of information there. But it's I don't think this is for exactly correct narrative, because it's some cases include more information in the numbers, but it's a different story there. Because I say the basically 1 + 1 = 1, 1 + 1 = 2, or 1 + 1 = 2 is accounting part, but the other part is 1 + 1 = 0 or 2 or 3 or something, because it's a synergy. There are many reasons there. So the better numbers ahead means is accounting part is only honestly 1 + 1 = 2, but our parts or other parts 1 + 1 = 2 means why you were add only 1 means is I bought 5, I sell 5, that's it. 5 income, 5 sell, 5 buy, 5 sell, that's it. But in the other part, financial part or management science part, think about that. So why you are bought 5, why you are sell 5? Because there's do you have another chance for buy 6 or 7, or do you have any chance or opportunity to sell 5 or 6 or 7? It means later, if I have some chance to explain that, we knows the opportunity cost. Opportunity cost means is we don't want to lose the earned money. So briefly, I say that if I bought 10, and then I can sold out the 10. What the accounting says is only 5 and 5. But if you have some think about this, if you bought 10 and you can buy 10, it's a little different story. That is the better numbers ahead meaning. Okay, so financial part is honestly the exact number. That's it. But a financial part or management science part or strategy part is a little bit further information in the numbers. Okay, this is another difficult story. So it's passed. And the basic accounting procedures is don't need to the exactly procedure, but I briefly explained just the procedure. The basic accounting process, only one thing: the asset minus liability equals owner's equity. That's it. Okay. Asset minus liability equals asset. That's the equity. So accounting equation. This is very simple. So what's the meaning of the asset? Asset is things of value owned by firm. You own something. This is asset. And liability. Liability means its debts. So what a firm owes to its creditors, also called debit. So what is your debit? This is a liability. And the owner's equity means its net worth. So total amount of investment in the firm minus any kind of liabilities. That is also we say net worth. So asset minus debit debts equal net worth. That's it. This is accounting. So the basic circle day and the accounting cycles. I showed that this accounting cycles. Explain this with the features. Okay, so the accounting cycle is number one, identify transactions. Okay, transaction. What kind of transaction? And then second is record journal entities, sorting. And number three, step three is post-record entries into tab. Mostly we using the Excel file. And step four is unadjusted trial balance. Unadjusted, just draft making. And step five, adjusted entries. First, unadjusted trial balance is draft, and then make it finally adjusted entries. And then step 6 is adjusted trial balance. Okay, 4, 5, 6 is draft, and then make trial. And step 7 is a final statement. That is to report final statement and choose your books, close your books. So, okay, this is monthly, quarterly, yearly, close your bookkeeping. So, okay, this is accounting cycle. First is identity transaction. What kind of transaction there? And then record journal entries, and then first ledger entries, and the draft means is unadjusted, so trial balance, and make it adjust entries and adjust trial balance, and then finally make financial statement and close your books, bookkeeping. So this is accounting cycle. Technological advances, what's the meaning? So as you know, this over the past several decades, the accounting technology has had a significant impact the accounting industry. So first is computerized and online accounting programs, as you know that. So this is for technological advance. That's why nowadays you can do it yourself for tax report. Or some company can do it by employees for related accounting majors. So in the accounting part, there's also lots of technologically developed them. So this is most of them is automated. So anyway, this part is common sense for your idea. So anyway, accounting and financial application is typically very powerful developed. Okay, let's move it. The balance sheet. I say the financial statement consists of three things. One thing, balance sheet, and income statement, and the cash flow statement. Three things. I say this financial statement, three things: balance sheet, income statement, and cash flow statement. Balance sheet shows the financial statement that summarize a firm's financial position at the specific point in time. Mostly quarterly, mostly annually. January 1st to December 31st means is a specific point in time.
quarterly, monthly, annual. So the balance sheet shows the firm's financial position. Okay. And the income statement means is summarize a firm's revenue and expenses and shows its total profit or loss over a period of time. Over a period of time means is last year. Last year income statement. So income statement shows to revenue, expenses, and total profit. Okay, or losses. And the cash flow statement means it summarizes the amount of cash and cash equivalents entering and leaving a company. This is the cash flow statement. So cash flow statement is very important for outside decides the company value because it summarizes the amount of cash and cash equivalent entering. Cash equivalent entering means is I sold some products and then I will receive it. This is for equivalent entering. And leaving a company have something inventory. So cash flow statements shows to the outside reputation of company. Okay. Anyway, there are three kinds of finance statement: balance sheet, income statement, cash flow statement. Okay. And first, we know the asset. I say the asset minus liability equals net worth. So asset means things of value owned by company. Company owns some value. So all thing is assets. Assets consist of the current asset, fixed asset, intangible assets, depreciation, liquidity. This is for accounting part. Anyway, but you have to know there are only one asset. What kind of asset? Yes, current assets. Asset that can or will be converted to cash within the next 12 months. Next 12 months is accounting period is changed. That's why current asset is during the 1 year. Okay, current asset. And fixed asset is a long-term asset used by a firm for more than 1 year, such as land, building, and machinery. This is not included in charge for 1 year, 5 years, 3 years, 10 years, whatever, something. This is fixed asset. And the intangible asset means is a long-term asset with no physical existence, such as patents. Patents, we cannot see that, but we are licensed. Patent, copyright, trademarks, and goodies. These things is intangible assets. Okay. Depreciation. Depreciation is the allocation of an asset's original cost to the years in which it is expected to produce revenue. It means is if you lease some car and then you're using that, and if you lease for some machinery or printing, and then depreciation every year. Okay, so it's a depreciation. And the liquidity. Liquidity means the speed with which an assets can be converted to cash. Okay, so the asset can be converted to cash is liquidity. Okay, but very quickly we can change the cash is the liquidity. I'll show you the example. This is balance. Balance sheet consists of asset, left side, right side, liability and equity. And the below part is the revenue, total equity. So total asset is left side, the right side is liability and equity. This is balance sheet sample. And this is the income statement example. Example of corporation income statement. So year end December 31st, 2021, and then what is showed that net sales compare the last 2 years or 3 years something, because of this income statement to show to other investors. Cost of sales, gross profit, selling, general and administration expenses, operating income, interest expenses, loss on sale on equipment,
income tax expense, net income. These things shows in the income statement. Okay, so we can show that the income statement very simple, and then we compare the 2011, 2018, 19, 20. So 2018 net income is $135 million, $1,000, and they increase $20,000, increase to $10,000, something. Very easy to show that. Is income statement example. And this is a cash flow statement example. Cash flow from operating, so net earning and addition to cash flow from investing, cash flow from financing, and then totally cash flow for 2003 is past final. This number is cash flow. It means the company, the firms can use the cash or buy anyone. This is cashable asset. This is for cash flow statement, shows that kind of styling. Okay. And what is the asset, and then continue the balance sheet is liabilities, because it's asset minus liability equals owner's equity. So liability means is what a firm owes to its creditor, also called, we say, debt is liability. Liability is two kinds. One thing is current liability, the other one is long-term liability. So current liability is short-term claims that are due within a year of the date of the balance. This is 1 year. Liability is current liability. And the long-term liability is a claim that come due more than 1 year after the date of the balance sheet. So 2 years, 3 years, because we have lots of debts, and then the debt is after 2 years, 3 years, long time. This is long-term liability. And the owner's equity. Owner's equity means a total amount of investment in the firm minus any kind of liabilities. Also called, we say, net worth. Net worth is owner's equity. So owner's equity is a retained earning, same meaning. The amount left over from profitable operations since the firm's beginning, equal to total profit minus all dividends paid to stockholders. So stock companies issue this tax a lot. So every year you have to decide the dividend or not show to dividend. So if you have one stock and then the company decide the dividend 25 cents or 25% or something like that, so it means it's all dividend to stockholders have to do, because this is a democratic style. For most of companies follow the stockholders thing. So owner's equity. Owner's equity is net worth. So how much net worth is very important. This is final output. These three things is shows in the balance sheet. Okay, asset, liabilities, equity. And next second final statement is income statement. Income statements means it's a finance statement that summarizes a firm's revenues and expenses, and also shows the total profit or loss by some over a period of time. It means it's last year. So the income statement shows to the revenue, expenses, also profit or loss. So revenue means the dollar amount of firm sales plus any other income it received from sources such as interest, dividend, and rent. These things is all include this revenue. Revenue is consists of the gross sale and net sale. Can divide that. So gross sale means it's the total dollar amount of a company's sale. I should know that. We are sale amount. Net sale means the amount left after deducting sales discounts and the returns and allowances from gross sales. If we sell that, in some cases return. Nowadays is Black Friday, Cyber Monday, and Thanksgiving. A lot of the sales values. So also it's lots of the refund there. That means it's net sale is gross sale minus discount or more return and the allowances. So net sales. Okay. And the expenses. What is expenses? The cost of generating revenues. This is cost. Cost of expenses consist of things. It's three things. One thing is cost of goods sold. The total expense for buying or producing a firm's goods or services. This is basic. Most of them is cost of goods sold, the sale or serving. And gross profit. Gross profit means the amount of a company earns after paying to produce or buy its products, but before deducting operating expenses. This gross profit. And operating expenses means is the expenses of running business that are not directly related to producing or buying its products. This is operating expense. As you know, this is very common sense. Okay, cost of goods sold. If you doing means sell the products or services and then you charge for expense. This is total expense. And the gross profit is we sell a lot and then before deducting operating expenses. This is gross profit. After that, operating expenses means is gross cost of goods sold minus gross profit. So it means is expenses of running a business not directly related to the products or buying its product. It's operating expenses, just operating. Not related to the buying or sell product. This is operating expenses. And what is the net profit? Net loss. We show to income statement things. Also net profit or losses. So okay, net profits also we say is net income. The amount obtained by subtracting all of a firm's expenses from its revenue. When the revenues are more than the expenses, correct? It's profit. We should do it, make the profit, net income. Net loss means is net loss is the amount obtained by subtracting all of the firm's expenses from its revenues. When the expenses are more than the revenues. Because it's below that. Because it's last step, loss. This is for RASK concept. Okay, so finally, the income statement shows the revenue, expenses, net profit or losses. Shows in the income statement. Okay. And the statement of cash flow, the third one is financial report. The state of cash flow means is the financial statement provides a summary of the money flowing into and out of firm during a certain period, typically 1 year, because it's follow the accounting year for January to December. So statement of cash flow is mostly 1 year. So anyway, the cash flow, the statement of cash flow shows that the summary of money flowing. Okay, and the firm's cash flow into three groups: the cash flow from operating activities, cash flow from investing activities, cash flow from financial activities. There are three kinds of things. Okay, it means is the firm's cash flow consists of these three groups. One group is operating activities. The other one is investing activities. And also finance activities. First, operating activities is, as you know, is related to the production of the firm's goods or services. It's the activity, operating activities. And investment activities means is to the purchase and sale of fixed assets. This is for investment activities. And final, financing activities related to debt and equity finance. This is financing activities. So I showed this cash flow, something like that. This is for show to the three things: operating activities, investment activities, financing activities. Okay, and let's move to analyzing financial statement. We reviewed briefly the financial statement, three things: balance sheet, and income statement, and statement of cash flow, and then how do we support or help from the financial statement. It's analyzing. So ratio analysis first. The ratio analysis means the calculation and the interpretation of financial ratios using data taken from the firm's financial statement in order to assess its condition and performance. This is a ratio analysis. Ratio, very simple. What is the net profit better than next year or 2 years? Can you compare that? Okay, we showed the income statement, and then we can know the net profit and net losses. See, that's it. This is a ratio analysis. See, so compare each year or each quarterly. And the liquidity ratio means a ratio that measures a firm's ability to pay short-term debts as they come due. So liquidity ratio means is firm's ability to pay. It means the company has some cash flow. And current ratio is the ratio of total current asset to total current liability, used to measure a firm's liquidity. So a current ratio, okay. So CEO asked me, Mr. Lee, manager coming, and then what is your current ratio this third quarter? And then the accountant managers show to the firm's liquidity statement. That's it. These things is current ratio. The acid test ratio. Acid test means it's very quick, very serious test ratio. The ratio of total current asset is excluding inventory to total current liabilities, used to measure firm's liquidity. This is for useful to firm's liquidity. So also, for example, the CEO asked to the financial manager, what is our company second quarter acid test ratio, please? And then the manager make the report to the firm's liquidity, and then CEO make decision. Our company is the liquidity ratio is show that, and then make decision making. And networking capital, the amount obtained by subtracting total current liability from the total current assets, mostly used to measure a firm's liquidity. Also is net working capital. Net working capital is shown to the subtracting total current minus total current asset. Okay, total current asset minus total current liability is the net working capital. Okay, this is not introduction part, but anyway, if you want to the accounting part, you have to do study later. Okay, and these things is how do we use the analysis, the finance statement. For example, ratio analysis, liquidity analysis, ratio, current ratio, acid test ratio, net working capital ratio, or something. These kind of, there are lots of the analysis method, but this textbook is only introduce 5 things. So these things is tools of analyze the finance statement. Okay, and analyze and find. Okay, continue. One more thing is profitability ratio. Ratio that measures how well a firm is using its resources to generate profit and how efficiently it is being managed. This is profitability ratio analysis. The profitability ratio is have some kind of things. I introduced 3 things. One thing is a net profit margin, return on equity, earning per shares. This is very serious, deep area for investment. So just to know that the profitability ratio, okay, this is for financial statement analysis tool, that's it. But it's a profitability ratio example is net profit margin. Well, how much the net profit margin? It's a ratio of the net profit to net sale, or it's called return on sale. So simply I say that if you want to study in accounting, you have to know this definition, lots of definition. And then the definition means A minus P, P minus C, C times 4, or something like that. This is for very basic concept for accounting, okay? So net profit margin is, so we say this net on return on sales. So how can we measure that? The percentage of each sales dollars remaining after all expenses. This is for net profit margin, including tax minus tax and the deduct. And then this is for net profit margin. And the return on equity, ROE, is the ratio of net profit to total owner's equity. Measures the return that owners receive on their investment in the firm. So return on equity means it's the firms invest to other things. And then the total owner's equity, we can calculate. This is ROE. And the earnings per share is if the company has lots of the stocks, and then earnings per share. Share means it's a stock. So the ratio of net profit to the number of shares, number of stocks, of common stocks outstanding, and measures the amount of dollars earned by each share of stocks. Okay, you earn some money, $1 million, divided your stock number. This is per earning per share. Because these things is very useful analysis for investors in the stock market. Okay, this is, and later you will study more. And the other analysis in finance statements is activity ratio. Activity ratio means it's a ratio that measures how well a firm uses its asset. Okay. The other one thing is inventory turnover ratio. The ratio of cost of goods sold to average inventory measures how we measure the speed with which inventory moves through a firm and is turned into sales. This is for activity ratio. Just you know that activity ratio. I heard that. That's it. Debt ratio. I mean that's common sense. You know that is debt ratio. Ratios that measures the degree and effect of firms use and borrow the fund to financially operate. Debt ratio. How much the debt in the company? Debt to equity ratio. Debt and equity compared ratio. This is for debt to equity ratio. So it is the owner's equity. How we measure that? The relationship between the amount of debt financing and the amount of equity financing. So the debt financing and the equity financing compared the ratio. This is debt to equity ratio. Okay. So this is for very important financial analysis tools. That's it. Okay. And finally is trends in accounting. So as I said, it's the first there are many kinds of technology developed there, especially the computerized tools. So also there are many kind of there are many kind of entries. So very new entries. Okay, we are very powerful use the security system, but the last several decades ago we don't have the security entries. So the security expenses is a new entries in the account part because it's a trend. It is shown to the new trend because it's a new entries in the accounting part. So also there we think about the automation. There are some automation will continue to play the important role in the accounting part. So also we think of automation and the cloud-based services. You know, the Google clouding. So last time we have to fix it and record it in the file by paper, but we don't need that. We put in the sky. We say that sky. There's a cloud-based services. We don't need to hard in here. It's cloud service. Also, stepping challenges. If the employees need to study to or learning for new trend, new technology for your employees. It's a common sense for powerful accounting part. That's why the employees need to study or experience that. So the companies give the chance to the account part to develop the area. This is new trend. Okay, this is for financial statement is mostly in the separate subject in the one core subject. But this is today we will study in the introduction part. So I don't want to deeply contents, but I am very lots of the materials, but you don't need to the contents because it's not your major part also. But commonly you have to know the this subject. For example, introduction to business and introduction to economics. It's most school, all of schools have to keep the general education requirement because this is college level. That's okay. This is the reason then. Okay, thanks for joining my class for this 4th quarter. So if you have some chance, hopefully next class I have it or not, I'm not sure, but hopefully see you again next which subject, I don't know. Anyway, thanks for joining our class and good luck. Okay. If you have any question regarding to class, let me know it through the school office and then I will answer them. Okay, thanks, Prof. Thank you.